Over the past month, shares of Microsoft are down over 5%. When the company announced their Q4 earnings after the bell, shares of the software giant fell another 7%. Will you step in and buy the dip on Microsoft? Just 5 days ago, on Twitter, otherwise known as X, links down in the description below. I'd love to see you on Twitter, Instagram, LinkedIn, all of the places where I am talking about stocks on a daily basis. Love to have your follow. If you're watching this video, links are down in the description. I let you know 5 days ago, on July 25th, we had a technical break that we haven't seen actually in over a year in Microsoft shares. We're seeing in the after hours a continuation of that. However, the thing to always remember with Microsoft, every time this company announces their earnings, they announce the guidance later on the conference call. In fact, it occurs usually at 3 p.m. Pacific time, 6 p.m. on the East Coast. That is when you get guidance, and that is often when you see a reversal in Microsoft, and that is exactly what we saw in the after hours. We'll talk about the guidance, how that compares to what Wall Street estimates were for the upcoming fiscal Q1 for Microsoft. We'll dive into all the numbers, the different segments, and answer all the questions you have about Microsoft's Q4 earnings. What is going on, investors? Hope you guys are doing well out there. Microsoft, over the past month, is down over 5%. Last 6 months, you're up 3.5%. Year to date, you're up 12.5%. And over the last year, I mean, you're outperforming most of the benchmark indexes, up over 25%. The company announced their Q4 numbers, revenue coming in at $64.7 billion. That was solid. 15% growth year over year. That is obviously on tens of billions of dollars worth of revenue. Wall Street was expecting a number closer to 64.4, so they beat expectations. What I always like to do is just look at the guy that's, maybe smoking a little bit of that good stuff they sell out here in California. 65.54, 65 billion and a half was the high-end estimate. So coming underneath that, typically when you see a company come over the high-end estimate, particularly one of Microsoft's size, well, shares skyrocket. That's not what happened with Microsoft. In fact, shares of Microsoft hitting the reverse button, down 7% in the after hours, but it's not the full story because you got to get that Q1 guidance on the conference call. And I always tweet this out really just for our own benefit as we're watching this program. Business and productivity, shade over $20 billion in revenue. Intelligent cloud still humming right along, nearly $30 billion. And personal computing, which is probably, sometimes you can read into a little bit of Intel's results, Qualcomm, Dell, others. If they give a strong personal computing number, sometimes it can translate into the other silicon and desktop computer makers. That's going to be about $15 billion. So your revenue guidance for the upcoming quarter for Microsoft, $63.8 billion up to $64.8 billion. Now you're probably asking yourself, well, what was the Q1 estimate? It was actually at 65.45. So a little bit light. This happened last quarter as well when they gave the Q4 guidance on the previous quarter. It was a little bit lighter than the estimates. These estimates will obviously get tweaked over the next couple of weeks. The high-end estimate certainly at 69, nearly $70 billion for the Q1. Probably absolutely not going to happen unless miracle happens. Now, they gave us a read. This was fiscal Q4, a little funky fiscal year system that Microsoft is on. This is a Q4 when most companies are reporting Q2 numbers. So they give you outlook for the next 12 months, not from a dollar perspective. This company doesn't give you forward revenue guidance in that sense. They give it to you on a quarter by quarter basis. But for the full year, they are expecting double-digit revenue growth over the previous year. So if you come up here and look at what kind of the previous year estimate was for 245, we're probably going to be close to $280 billion in revenue for Microsoft for the upcoming year. They also gave us a view of CapEx, and this is obviously very important for the NVIDIAs, the AMD, certainly Broadcom as well, some of the other custom silicon makers, anybody in the data center, certainly Supermicro, anybody out there that services the data center. Well, Microsoft confirmed that CapEx will be higher versus 2024. I'll show you what they spent on CapEx. This is capital expenditures. This is primarily data centers and GPUs and those types of things. I'll show you what they spent last year and give you my thoughts on where they'll be in the upcoming year. So overall with Microsoft, disappointing initial results. Shares had a knee-jerk reaction lower after the guidance and Satya Nadella kind of getting on there, talking about some of the customer wins and answering some of the questions. They are making an emphasis that the investments they're making now in terms of CapEx, in terms of the data center, that this is going to pay off over a 10 to 15 year time frame. And if you look at the growth of Office 365 Copilot, other AI services, well, they certainly had a lot of growth, and I think that's when shares started to turn around for Microsoft. Now, speaking of turn around, look at your Azure growth. You're bringing in these customers, 30% growth on a constant currency basis. That is just absolutely phenomenal. Across the board, you're seeing solid growth outside of devices where I think you had kind of a refresh going on there. Xbox content just continued to hum along, although I would assume most of this 60% or close to all of that 60% has to do with the fact that they acquired Activision over the past year. Even when you look at kind of their search and news business, up 19% over the past year, showing that maybe they're driving more eyeballs to their devices, which in turn helps Bing and other AI services that they've layered on to their browser as well. Things are looking fantastic with Microsoft. They emphasize the fact that these Azure wins, this has now become the premier AI cloud, whereas in the previous generation of cloud computing, Amazon AWS was absolutely the premier option. I think going forward, the next 10 to 15 years, unless there's some kind of sea change that we see materialize over the next year or two, Azure, I think, is winning that. And they emphasized on the conference call that by acquiring these customers in their Azure cloud, they'll layer on data analytics, they'll layer on security, which may or may not work. They'll layer in other services. Certainly, maybe they'll get sold Office 365 seats, Team seats, Copilot seats. All of those upsells will happen as you bring in the big enterprises and the businesses into Azure. And I think it's going to be a winning formula for Microsoft. Now, speaking of a winning formula, look at your quarterly revenue, $64.7 billion. That was 15% growth year over year. Last year, you did about 56.2, and we were blown away then. We're blown away now. You get a 12-month view as this is year end, 212 last year. 245. Again, the company is guiding to double-digit revenue growth. My guess is that's probably like low teens or something like that, maybe even slightly higher than that. So you're going to get in that $260, $270 billion worth of revenue. Now, what do you know about Microsoft? Is they've got massive gross margins. Look at your total cost of revenue. Off of $64 billion, you spent barely $20 billion, or not even $20 billion. So your gross margins off of $64 billion, this is not millions, this is billions of dollars, $45 billion of gross margins. Most companies would be happy to do this in a decade. This company does it in a quarter. You see, for the full year, you pull down $171 billion. This is gross profit. Now you got your research and development. And like all tech companies over the past year, this company has streamlined and made things extremely lean and mean. Research and development did tick up from 6.7 up over 8, but your sales and marketing didn't move a whole lot, 6.2 to 6.8. You see for the full year from 22.8 up to, we'll call that close to 25. Your general administrative went from 2.2, stayed roughly flat for the full year, also staying flat. So they're not bleeding out a lot of cost in that general administrative line. They're spending most of their growth on their operating expenses on sales and marketing and R&D. That's exactly where you want to see it. Here's your operating income off of $64.7 billion of total revenue, $20 billion in cost. You come down here to operating income right at about $28 billion. Last year, you were close to 24. Look at the full year, $110 billion worth of operating income, otherwise known as about $11.80 per share. Now, on the cash side of the balance sheet, coming up a little bit lighter than last year as they completed that Activision Blizzard deal. They had well north of, that looks like about $110 billion worth of cash last year. Now you're closer to a number closer to about 75. It looks like, well, I guess they added up to me right here. I don't need to do the math in my head. $75 billion compared to 111, but again, you added on Activision Blizzard, which is adding revenue and profits and obviously maybe long-term value to the company as well. Now, over the next 12 months, they owe about $6.7 billion worth of debt, but your total long-term debt really didn't go anywhere over the last year. So that is very, very solid. Here's where your cash flows. Here's where you're going to get a read into your semiconductor and data center companies. Let's first focus on the net income. Pull that down, $22 billion in the most recent quarter. For the full year, you made $88 billion in net income. Net income is after you pay your taxes, after you pay pretty much all your expenses, including servicing your debt. You made $88 billion. I mean, that's the bottom line over at Microsoft. The most recent quarter, you did $22 billion. You add things back in, like depreciation and amortization. That's primarily an accounting charge. You have stock-based compensation for the executives and many of the employees, other types of add backs and subtractions. For the full quarter, you did $37.2 billion of cash flow from operations. So that's cash you can use to spend on the data center and spend on other areas of the business, including acquisitions as well. For the full year, you pulled down $118 billion of positive operating cash flow. So when we talk about what this company is spending on not only a quarterly but a yearly basis in terms of addition to property, plant, and equipment, this is otherwise known as CapEx. This is almost all data center and GPUs. For the most recent quarter, you spent about $13.9 billion. I think Google was in a similar run rate in terms of that CapEx. For the full year, you did $44 billion. I think there were some estimates that it was going to be closer to 50. They obviously maybe dialed that back, but my guess is they didn't really dial it back. They just didn't have the capacity from NVIDIA, maybe from some of the other data center, just from a site perspective to spend the 50. Next year, I think they're going to be on this $14 billion run rate per quarter. I don't think you go down quarter over quarter. So they're going to be well north of $50 billion in terms of total spend, and maybe not well north, but kind of the mid 50s, $54 billion worth of data center spend. And they really justified it on the conference call. They said, hey, this spend, we've got to do it. We don't have enough capacity. There's enough demand from a Copilot perspective. People are trying out Copilot. We're getting great feedback. They're expanding the number of seats. More businesses are coming in, and so they need more and more space on that data center, and it's a huge expense up front. $14 billion in the most recent quarter, $45 billion over the last year. But this is a payoff over a long period of time. These GPUs are going to last more than a year or two. They're going to use these GPUs for several years. And so that's what the company is spending the vast majority of this $37 billion and $118 billion of operating cash flow. Now, they continue to repay the debt. They're doing a nice job there, certainly in a lower interest rate environment. That's not going to be a problem. Even in today's interest rate, it's not a problem for a company like Microsoft. They continue to buy back the stock, but not at the same pace because they had to service that debt, and they've got a little bit higher CapEx than they did last year. Look, this time last year, barely anybody was talking about AI. You were at about $9 billion in CapEx. That has obviously ballooned to nearly $14 billion. Your repurchases of stock last year was $22.3 billion. This year trimmed down a little bit to $17.3, although look at the debt repayments from just under $3 billion up to nearly $30 billion. The company's doing a nice job, in my opinion, servicing the debt, making sure that doesn't get maybe to an I wouldn't say unmanageable area, considering you have $118 billion of operating cash flow, but it's allowing you to continue to do those types of things. And my guess is if you have a continued drop in interest rates, that's going to allow the company to maybe refinance debt instead of pay it off, and should continue to accelerate the debt payments. You also have dividend in here as well with Microsoft. Now, jumping over to the stock chart, we talked about how, and we talked about this on our Fang Stock Recap show. I alerted subscribers on X as well. Again, it's free to hit the subscribe button or the follow button on X. I would love to see you over there. Since November of 22, so nearly a 2-year uptrend on the chart, you finally broke through that. Now, what it means in the shorter, some of you might be wondering what this means. In the shorter term, it absolutely means that upward trend is more or less over. However, oftentimes with these uptrends, instead of being, we'll call that like a 30-degree angle. I didn't get an A in geometry. In fact, I probably could barely pass geometry. Instead of a 30-degree angle on the uptrend, they tend to want to flatten out and start to shallow out. One area where I could see potentially materializing is we shallow out to that uptrend right there. So let me take this upper trend line, which is more or less still intact, but maybe instead of making a very steep upper channel, we start to flatten this out. And here we are right at the bottom of what I would consider potentially a new uptrend. We do have support for shares. In fact, they bounced off this level, I believe, in the after hours, right about here at about $390 per share. Should see some support for shares. Lower, you'll have some support down here at $366. Even lower than that, and this is a backup your Chevrolet pickup truck moment, you got to move all the way down to $340. You got to make this decision in advance, because if Microsoft, and this is something that can absolutely happen, Microsoft pulls back to the all-time highs that it retested and finally broke out above earlier last year, this is a moment where you have to step in and buy this one aggressively. At the levels that Microsoft is in now, does it necessarily have to be aggressive? If you already have a position, it could be just adding a couple of shares. If you don't have a position, this is an area where if you wanted 10 shares of Microsoft, sprinkle in a couple shares. This is also an area where me personally already have a position in Microsoft. Probably won't add to it since it's already kind of significant. This is where I trade the upside with Microsoft. Generate a couple of trading incomes. Trading's not for everybody, but this is an area where I think you can get a technical bounce with Microsoft, at least in the shorter term, move higher. Conference call was everything you'd expect with Microsoft. The upcoming guidance, while a little bit weak, from a totals perspective, you should have a great full year growth. And I think what's underestimated is this Azure growth at 30%, very similar to what Amazon did over the past decade. As they bring these clients in, they're able to layer on more services and more costs, and they essentially lock you in. Microsoft's probably in a better position than Amazon is to upsell them to 365, to upsell them to other commercial products and everything that Microsoft has going on. And I tell you what, in the after hours, Microsoft shares have bounced back from the lows, and I think this one is a buy probably when you wake up tomorrow morning. Folks, that was Microsoft's Q4. We'll be back later this week. I think we've got Apple, Amazon, and Meta. Until then, good luck with your investments.